Wyatt, let's stay with you. Talk about how the interest rate environment, what you're seeing right now economically, how it's impacting the type of investing that you normally do.
Great question. Thanks, Joe. Because we have a smattering, right, of everyone from I've just started yesterday in investing and I'm running this all the way through, and then those that are on the passive side and they want to deploy a lot of capital. And so what I've been telling people lately is the numbers are crazy. They don't really make a lot of sense for the buy and hold investor, but they may again very soon. And we have seen a lot of trepidation, and I would say I'm telling people if they're in the fix and flip business, right? Don't go for the high end. Do less, charge less. People are looking for a deal right now, and that is a quick way to get in and out on things that you're doing.
Makes sense. Erwin, what are you seeing?
For a year and a half, we did nothing because of interest rates. And we're seeing a lot of deals come back to the market that didn't trade 2 years ago at lower expectations. Sellers that need to sell, funds that are at the end of their life. And so we're finding a lot of deals at 9 to 10 cap rates, which even in today's financing rate, you can still distribute 9 in the first year. And then if you can work the tenants, and some of them we're seeing still need to be converted from gross leases to modified or net. So there are opportunities out there. And I think over the next 2 years, you're going to see a lot more opportunities. I know I've seen big players in the industrial space like Clarion Partners reiterate between 25 and 28. They think it's going to be, buyers are going to have a lot of fun.
That makes sense. That makes Joe. Jack, what are you seeing?
Yeah, for us, it's a little bit different. Our fund is very low leverage. The family has seen in their other businesses things slow down. But for us, we're putting out loans between 14 and 17% a year, plus a few transaction points. So for our business, it's more just about picking the right partners to ensure that we're getting paid on our loans and everything goes well. But we haven't really seen interest rates affect us, to be honest. It's actually been a pretty busy last 2 or 3 years.
Matt, when you guys are doing your hard money lending, what are your rates? I mean, what packages do you see that everybody really says, okay, I can do that?
We're 6 months to 36-month terms, 10.5 to 14%. And to be quite frank, on our end, the interest rate normalization process that we've seen has been a kind of a breath of fresh air. I mean, rates were so low that you kind of had to wonder what reality was. So I feel more confident today than I did 2 years ago. And I think moving forward, the rates aren't going to move that much. I don't think they really can. And I think it's positive for people that are interested in real estate values.
I'm just curious, just go down the row. How many of you guys think that rates are pretty much going to stay right where they are for the remainder of the year? Wyatt?
I do. I think they'll stay about like this, yeah.
Erwin? Same deal?
I think they're going to bounce around in a tight range for a while.
Yep, Jack?
I'd agree.
Okay.
Absolutely.
It's what we want or what we think.
What do you think?
Rates will be flat for a long time.
Yeah.
I'll agree with that, but if I was a betting man, I'd go against whatever I say because I'm usually wrong. So.
No, I mean, look, I've told this story before. I got licensed when I was 19 years old. The year was 1973. Rates were 7.5%. Nobody thought it was high. Nobody thought it was low. It was the rate. The only reason you're dealing with that now is, as you said, we have these artificial. As the government throws trillions of dollars into the economy, you're going to hold those rates low for 12 years. It was la la land anyway. Speaking of that, we are in la la land. So the reality is, just to take that I see, and obviously we're a very large real estate company all over the world, I don't think rates going to modulate much at all. I think they'll sit between 6-7%. You're the new rate.
If you are a founder, raising capital, developing real estate, or you're an investor, would love for you to get involved in the Family Office Club. I've run this community for 18 years now. We've hosted 300 live events. We have 17 million social media group members and followers. We have the #1 YouTube channel on family offices. We have the #1 most popular podcast on family offices. You can learn more about us and our membership options at familyoffices.com. We have 30 in-person events planned in 2026 and another dozen events this year. Please go to familyoffices.com to learn more.